Safe Forex Havens in an Overpriced World by www.theforexnittygritty.com. There appears to be too much cash chasing too few assets all over the world. The inherent risk in this situation is that one or more asset bubbles will collapse, taking the world, or at least many national economies, with it. Thus, we look for safe Forex havens in an overpriced world. What happened? How will $10,000 an acre Iowa farms and $240 million London apartments affect currencies and relative foreign currency rates? Read on for our take on safe Forex havens in an overpriced world. Asset bubbles everywhere. There has been a competitive devaluation of Forex currencies going on for at least a year. More and more central banks are buying other currencies, setting low interest rates, or running up debt as a means of reducing the value of the home currency. Some nations are essentially printing money to increase the money supply and keep their economies from tanking. It used to be that Japan, followed by Taiwan, followed by China, did this to keep their currencies cheap in order to gain a competitive advantage in exporting to the West. But in the aftermath of the worst recession in 3/4 of a century, the USA and European Union, the two largest economies in the world, jumped on board this train. We pose the question, who will win this competitive devaluation of currencies? And how can a Forex trader make a profit? Now, as the devaluation of currencies via expansion of the asset bubble, should those with assets look for safe Forex havens in an overpriced world? Interest rates and return on investments. When the price of things go up, the rate of return on investment commonly suffers. When interest rates on bonds fall, the prices of bonds commonly rise. What happens when interest rates go up? What happens when banks demand their money on non-performing loans that occur because someone borrowed way too much money to buy an asset that does not make enough money to support the principal and interest required to pay back the loan? Fear of currency or currencies. Gold was a safe haven for many as it rose from $200 an ounce to $1,900 an ounce, and now even gold bugs are thinking twice as gold hovers in the $1,300 an ounce range. So, folks with money are bidding up Iowa farmland, apartments in London, and many other overpriced assets. This in many ways appears to be a flight from currency. But if you want to keep your money, what are safe Forex havens in an overpriced world? A useful way to look at this is to look at where direct foreign investment is going. Take a look at a bit of useful information from the 2013 United Nations World Investment Report. Foreign direct investment comparison of 2007 and 2012 in billions of US dollars, taken from the United Nations World Investment Report 2013. Money today is flowing into the USA, Japan, South Korea, and Hong Kong. If where investment is going is a measure of safe haven Forex trading, look to the currencies of the USA, Japan, Korea, and Hong Kong as safe Forex havens in an overpriced world. As always, do your own homework and be suspicious of Forex tips. For more insights and useful information about Forex trading, visit www.theforexnittygritty.com.